Hey, good afternoon, everybody. Welcome to another daily market report brought to you by Mike Bjork. Sorry about that. It's Thursday, December 19th, and we were recording this after the market had closed. So we're going to give you some indication as to what happened today. And then, of course, we had a big day yesterday. So we'll kind of touch on that underneath the headline news. So today we had the economic news, a couple of them, and we'll start off with the weekly jobless claims. Now we had 369,000 people applying for unemployment last week, which kind of was a big jump from when we were averaging between 320 and 330 range, or in the 330 range. So, which brings us to the forecast at 338,000, but it jumped this time up to 379,000. So some of this could be, ups and downs to seasonal jobs as a responsibility for this, but obviously it's still a pretty big number and a big jump from where we were before. And then on top of it, we typically will have people being hired for holiday jobs as well. So it will be interesting to kind of see what those numbers are at. We also got the existing home sales for the month of November, and we had 5.12 million back in October. The forecast was supposed to pull back to 5 million. It dropped down to 4.9 million. So kind of disappointing right there that existing home sales have declined, even though the home builders have higher confidence right now. We also got the Philly Fed. This is the manufacturer in the Philadelphia region for the month of December. And we had a 6.5 on their index. And it was supposed to go up to, the forecast is supposed to be 11 and only going up to 7. So a slight improvement, but still fell short of the forecast. And last but not least, we got the leading indicators. This kind of gives us an indication where the economy is moving or if we're going to have much growth. And we had a 0.1% growth back in October, and for the month of November it came in at 0.8%. So it's showing some growth, but not much of growth. Very, very small growth leading toward in the near future, what they're projecting. So as such, we're going to jump over to the headline news here, and stock market kind of closed mixed. Dow was actually the only one that closed upwards a little bit. A lot of them were down pretty much most of the morning, and then Dow kind of rebounded a little bit and actually closed in positive territory, not that far off on there. And then let's talk a little bit about the FOMC statement. As I indicated, if you saw my updates yesterday, the stock market or the bond market closed down about 60 basis points, so about a half a point in fees. And that was the change in the pricing on there. Now, basically, what they did was they did taper a little bit. It was only about $10 billion. They reduced it from $85 billion to $75 billion. So they're still buying mortgage-backed securities, but they did start the taper a little bit, and it was a very modest one at that. But the stock market rallied because the wording in there is that even if the projection of the Fed is that even if we dip below 6.5%, they're going to keep short-term rates at a very low level. So the investors like that. That's why they kind of rallied a bit. So short-term rates are expected to be low for quite some time right now, especially when there's concern that we have on inflation where it's extremely low. It's below the 2% level where they're at. It's year over year, it's about 1.2 right now, and it's still very low for all the stimulus that we've been putting into the economy. And they're concerned that we could have maybe deflation. So that's the main concern right there. So let's go ahead and take a look at the bond market today, see what the interest rates did. So we started the day off, as you can see, we had that huge red from yesterday, but today we started out the day off actually 50 basis points even lower. So we touched at the 99 level and worked our way up. So we rebounded quite a bit, up about 41 basis points, and closed actually about 9 basis points short of where we left off yesterday. So basically, I mean, we had worsening in pricing obviously today. Almost basically we lost 1 point from yesterday morning to today. But we did pull back, and we're close to where we left off yesterday. We have an opening gap, and it was for the most part kind of close. So let's be cautious here. Next week we'll have a little bit more data, and of course it'll be a short week with Christmas and everything. So it'll be kind of interesting to see what happens. But But right now rates did creep up slightly today. So be very cautious. And again, with the tapering in process, expect the rates to steadily climb upwards for 2014. Thanks for watching, folks. I hope you guys have a great day, and we'll look forward to seeing you guys tomorrow.